All right. Hello, everybody. Let me make sure everything's working. Audio is good. Yes, audio is good. Let me know if audio is bad. Camera's good. Hello. Good morning. It is July 19th, 2022. We are 10 minutes away from the United States of America stock market opening. Ryan, thank you for being in the chat. July 27th. We are 8 days away from July 27th. I'm happy to be alive today. I hope you guys are happy to be alive. Many things can go wrong in your life, but the fact that you are alive today and have an opportunity to live again is a good thing. It's something you should not take for granted. And I definitely don't take today for granted. Good morning, David. Yes, Richard, we are live. Lots of things to talk about today. First of all, we have Netflix earnings after the bell. Oh boy, am I excited for Netflix. Oh boy. Me and Sean from Invest to Live did a podcast yesterday that will be out probably in a couple hours. And we talked extensively about the problems with Netflix and some of the issues that I think they're having. So we're going to be discussing that as well. Samuel, thank you for being in the chat. Hello, Amit. I'm pumped because of Shopify. So Shopify and YouTube have announced an integration together. Very interesting, very obvious mix for YouTube and Shopify. I mean, the interesting is, I think, is this just proves how difficult it is for companies to do one thing right. YouTube had its own YouTube shop, it was integrated a while back, but I think they realized no one wants to shop on YouTube. They want to shop on Shopify. So let's just integrate with YouTube, right? So it's incredibly difficult for companies to do something that they're not native to being able to do, which is why the Shopify integration with YouTube makes a lot of sense. Let's look at the stock. Let's see if it moved on that news at all. I wouldn't imagine it did too much. It's up 4%. That's not bad. It's up 4%. Up 5% pre-market. Up about 5.2% at $34 pre-market. That is not bad at all. So Shopify is up based upon the YouTube partnership. Look, I mean, it's an obvious thing. If you have a ton of people watching a YouTube video and you're like, if I start selling these Amit branded cowbells on Shopify right through. The thing about Shopify is it's not a really audience discovery mechanism. It's a platform that allows you to build something, and then you need audience, which is where you get Facebook ad targeting and TikTok ad targeting, etc. If you've built up a YouTube audience and you just display your items, theoretically, people can shop right from YouTube. And maybe YouTube, take a little commission or percentage, or they have some deal with Shopify, whatever it may be. But it's a no-brainer. It makes a lot of sense. Let's see overall how that works out. Wow, early day. Yes, I woke up a little bit more earlier, so I was able to start a little bit more earlier, which is good. Morning, Palantir below 9 today. Is it below 9 already? I mean, we'll see if it goes there. Where's Palantir? It's up 9.18 pre-market. So we'll see. Look, again, the day-to-day movement of Palantir. By the way, if you signed up to my newsletter, I just sent out the newsletter this morning. They hired this guy. I'm probably gonna make a video about it. His name is Sean something. What's this guy's name? His name is Sean Massico. And this guy's another interesting dude because he worked with the Federal Advisory Board. I mean, he worked in the Air Force. Yeah, he's a previous Air Force Reserve assistant. And this is in line with Palantir's Federal Advisory Board strategy. I'm gonna make a whole video on this later to get more deeper analysis, but they are recruiting very senior level people that are in the United States government, and they're getting them to join the company. And as a result of getting them to join the company, they are able to make some pretty significant inroads into landing some bigger deals. I mean, that's the obvious sort of reason why. Otherwise, why are you hiring this guy, right? I mean, he's special, but I don't know if he's that special to be hired as a consultant that's probably making, high 6 figures per year, other than to get them more government deals, so that when they're landing a deal with the Air Force, they can say, hey, we've got this former Air Force, it's kind of the way that things work. Sam says, I like how they are establishing themselves as a huge shopping infrastructure giant. TikTok shopping first, and now they also handle YouTube. Insane. Yeah, I agree. I think it's good. I don't think it's bad for Shopify. I guess we're going to see if people actually buy from YouTube, and I think that's still, we have to see if that happens. I do think, though, that given how much people hate the stock, and this, Sam, because you're in the stock, the ARC stain and all that stuff, even though I think it's a phenomenal company, but the stock, people just don't like it. So I'm not sure what's going to move the stock per se, but it is definitely a good integration with YouTube. I agree. I think also they've integrated with Shopify and Spotify, because everyone gets their names mixed up all the time anyway. So I think Shopify had a partnership with Spotify a couple months ago. They did a funny tweet about their names, and they launched it. Do you even sleep, my guy? Honestly, no. I woke up today, guys. Tom called me. It's every day. But honestly, he's one of the reasons I woke up early today. He just woke me up because he called me and he was talking about something. Tesla up in the pre-market, by the way, 734. Tesla earnings are today. No, they're tomorrow, I think. I think they're tomorrow. Netflix is today, but they will be up there. So that's why I woke up early. Now, if you guys saw me last night on my late night stock talks, I was wearing the same shirt. So I have not showered yet. So I'm just I just took off the tie, but I slept in this shirt. This is the life of a startup founder. Kathy gonna look pretty stupid soon. We will see. Now, for those who haven't seen Glitch Life's interview with me, I highly recommend to check it out. We talked about Kathy Wood potentially not looking like an idiot on her 87 million shares of DNA. And that is right here. By the way, we have the opening bell in 4 minutes, so we will be there 4 minutes. Here we go. So it's a 20-minute short interview, super quick, or even 17 minutes. If you wanted to know what ticker symbol DNA Ginkgo Bioworks is, highly recommend watching this. 17 minutes, and it gets straight and sweet to the point. Glitch Life is expecting a 20x from DNA, so obviously take it with a grain of salt. They are very bullish, but I think there was a good job of explaining the sort of macro thesis or bull case. Now, there's obviously some bear case arguments that we talked over as well, but Kathy bought another 1.2 million shares yesterday, so now she has 88 million, not just 87. I'm not saying Kathy's, buying is everything, but it's interesting. She sold 1.3 million of Spotify the other day. It's like, why? It's you ask yourself these questions. Why are you doing that? These are things to think about. Ryan, you're talking about Palantir. Yeah, no, I agree. I know you were talking about Kathy's gonna look dumb for selling Palantir. They got Shopify partnered with Pinterest, Spotify, and Google Shopping too last year, so they already been working together. Yeah, so Shopify is integrated everywhere, and they've already been integrated with Facebook for a very, very long time. So we will see. When is Tesla earnings? When is the day? It's gonna be on July 20th is tomorrow. It's tomorrow. Okay. So Netflix earnings date then is today, after market. Okay. Should I live stream the earnings after market, bro? I feel like I should. That's a hell of I'm excited for that. I am excited. Okay, here we go. Where is the Weeble? All right, so we have the stock market opening in 3 minutes. Market's pretty good pre-market. It's really weird because we have inflation and it's running, and we're probably not supposed to be doing that well, but nonetheless, pre-market S&P up at 386. Bitcoin and ETH. If you bought Bitcoin on June 19th at 17 grand, you would have made 5 grand in the past month off of the bottom. So it seems like June 16th was a bad day for a lot of companies, or in that June 19th to 20th range. Bitcoin's up. Bitcoin's pumping. Doesn't really make too much sense. But Bitcoin's up as well. Snapchat is up pre-market. Palantir is up pre-market. Shopify is up pre-market. Spotify 105 up pre-market as well. Nvidia up pre-market 3%, 165 as well. Google stock split went pretty well. They haven't gone that down per se, 111. I think most people were expecting to try to get into Google below 100 if things get really bad, which I would look at the 95 price and I would be really interested at Google. But I don't know, because if we have this massive rally, this beautiful bear market rally, because everything's over and we have no issues and commodities of blah, 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 then maybe we don't need to worry about it. Where's Twitter stock, by the way? What is Twitter doing? Twitter's at 38? Wow. Wall Street might think they have a chance in this deal. Wall Street might think they have a chance that Pelosi's buying Nvidia. Yeah, that also makes sense for why Nvidia's up. Time horizon for Palantir, at least for me, it's within the next 5-6 years. I think we got to give them some time. The macros got to get better, and then they're going to have that year of explosive growth, and we're going to see really what they can become. So it's going to be interesting covering them. Sold Google yesterday. Okay, interesting. Makes sense. I mean, at the end of the day, you got to do what you got to do. Shout out to 117 people being here. Thank you so much for being here and spending your morning with me. We are about 10 seconds away, 20 seconds away from the market open. If you are new to this channel, we have a cowbell. And on this cowbell, we're the only channel on YouTube that does this. We ring the cowbell when the market opens approximately at 9:30. Here it is. The stock market in the United States is open. Wake your ass up. It is time to analyze the market. Let's go to Walmart. Walmart doing okay. 129, not too bad. Walmart, not a stock I own, but a stock I'm thinking of. Do they pay a dividend? I don't think they pay a dividend. If they do, I would be nice. I would want to hold Walmart. Walmart and Target 149, 129. These are the companies Kathy says there's a lot of excess inventory, and we know this has been reported. So that should be helping in the inflation world if inventories are sort of the main crucial factor. I'm not effing leaving. You guys, if no one's watched that video on my channel yet, it's called 9 Days. You got to watch that video. ARK, $44, up 2%. I sold my ARK at 48, but then I bought Palantir at 1080. So I got out, but I also, lost some money on Palantir. If Palantir gets to about $12, the past like 15 grand I've spent over the past couple months will all come back to me because, or it'll even out, right? Because I've been buying the dip from Palantir all at 12 and below over the past 4 or 5 months. And I bought at least around 15 grand of it, probably a little bit more. So if we just get back to that, I mean, some of that money is going to come back to me. But if we're at 8, 7, like that's just really below my average. Roku at 90, S&P at 386, Spotify 106, Open Door struggling to hit above $6, man. Open Door, it was at 25 at one point. So if you were to buy it now and gets back to that, it's a 500% return. Open Doors, I'm curious about their Q2 earnings. Q1 earnings were phenomenal. Q2 earnings, I'm going to be interested. Well, wow, Enphase. This bad boy shot up. It was at like 190. Goodness. Or maybe that was a day ago or something, but wow, Enphase is 209. Nvidia 164, QQQ 293, $7 away from the QQQ hitting 300. It's kind of weird if you ask me, but it is happening. Walmart pays a dividend. It's pretty crappy. Yeah, that's what I thought. Walmart probably pays a crappy dividend. Wants to buy Walmart, but won't buy Tesla. Look, Blake, I still feel like Tesla's a little expensive if the market collapses. Like, you cannot blame me if the market collapses. Tesla's not going to stay at 736. It's just obvious. None of these stocks are going to stay where they are. And I personally am still worried the market is going to massively crash, even if we have a bear market rally. The reason I'm saying this is because I haven't seen good inflation data yet. That's it. That's my argument. If I see good inflation data, yeah, I'm back on the train of like everything's great. But this rally makes no sense. You could say, oh, the market's baked it in. It's like, yeah, but what if inflation gets worse? We didn't think it would get worse from 8.8 to 9.1. Now, granted, you're saying commodities have like hit a peak, oil prices going down. I get it. We just need the actual data at this point to confirm it for me. I need to see that inflation. If inflation starts going down month over month from now until the end of 2022, I think we're in for a pretty big rally and where things are going to get better. But until we see that, it's rough. When you've got some of the biggest banks in the world saying S&P to 3,200, it's like they're not just saying that for FUD. I mean, at the end of the day, they want stocks to do well over the long term as well. They're trying to really analyze what's going on, and it doesn't look like everything's out of the blue. Now, I don't mean to say that everything's going to be horrible, but we also got to see earnings, right? Meta's at 170 doing nice 2% on the day. We've got to see Facebook's earnings. What if Facebook puts up, they're expecting 28 billion in ad revenue. What if they put up 23 billion? I mean, that's 7 billion less than expected. That means people are not spending money on Facebook, because consumers aren't buying stuff, which is why advertisers aren't spending money, right? It's a symbiotic relationship between advertisers and consumers, supply and demand, which means there is a slowdown. These are things we really have to think about before we just go willy-nilly and start buying stocks even at these prices. Or you may miss out. Yeah, or I may miss out. That's the other thing. Did you see Jim Cramer getting tough with meme stalkers on Twitter? He's getting roasted. They are buying GME to spite. Oh man. Well, that's Cramer for you. We're gonna look at CNBC in a little bit. But yeah, this is pretty interesting. Again, nothing too crazy that's going on overall. Prices are relatively flat or up a little bit in the pre-market. So let's go to CNBC. Now, the Elon Twitter saga is continuing. I thought Elon's case against Twitter is actually pretty good, but apparently there is some people saying that actually Twitter is still, that's why I think Twitter's at 38, because the argument is, well, they still have a little bit of an argument to be able to prove that they're doing okay. So let's hear a little bit about what's going on with Twitter. Again, when I read that their methodology doesn't use any AI or machine learning to be able to figure out how to have fake bots and that they're all doing it by hand, I thought that Elon is a good case, but let's hear the counter argument here.
I mean, if you mean substantively at the case, it definitely looks like Twitter does. I mean, unless new facts are developed, and that can always happen, it really doesn't seem like Musk has much of a basis to walk away from this merger.
At this point, it looks like the timing is going to be an important one. If this is something that can go to trial quickly, it would certainly benefit Twitter. They want to get through this and get this moving on. Obviously, Elon Musk would like to slow this process down. If you just look at Delaware Chancery Court, what is the time frame that you would expect to see this laid out?
I think that that at the very least, she'll probably set a schedule that's probably a little bit further out than what Twitter is requesting, but much, much sooner than what Musk wants. Musk wants a trial in February. That would leave a tremendous uncertainty hanging over Twitter for several months. And Twitter wants a trial in September. That's probably a little bit faster than needs to be. So I think it's likely that she'll, choose a date further out than what Twitter's proposed date is, but not by a whole lot. And in the past, Chancery can move incredibly quickly when it feels that it needs to.
You looked at this particular judge, looked at her track record and made any estimates about what her expectations about what you think happens next, just based on what she's decided in the past?
I don't think you can really tell what based on what she's decided in the past, like what necessarily happens. I mean, every case is different. She's definitely shown that she will and can order an unwilling buyer to close a deal if she determines that that's appropriate. But I don't think that tells us what she's necessarily going to do in this case, and certainly not at this hearing. I mean, this hearing is just a sort of preliminary scheduling conference, and it might give us some hints about how she expects the case to unfold. But at the same time, she's kind of aware that the world is watching. I mean, she gave us all a phone number so we can listen in, and she may be concerned that tipping her hand too much will cause a lot of fluctuation in the stock prices of Tesla and Twitter, and she may not want to, get too many hints away, too much away about her thinking.
If you think Twitter has such a strong case, do you think that there is a chance for any sort of resolution, a settlement that these two sides could reach beforehand?
It's really hard to say, because it's hard to say what Musk exactly is after. I don't know whether this is all a lot of noise to get the deal price a little bit lower, and Twitter could reasonably say getting a deal price lower is worth it just to avoid the delay for our own shareholders and getting this money to them. But if what he really wants is to walk away, I mean, that's not, or a dramatic price cut, that is not an easy ask for Twitter to accommodate. They've got a contract, it has a very high dollar figure on it, and they can't easily give that up, not while they're in a strong legal position. So it's very hard to say, because I can't quite tell whether Musk wants a small reduction in price or whether he's shooting for just out of the deal entirely. It's really hard to say how far the parties are apart.
Yeah, so this is interesting. This was a law professor sort of analyzing this, and the argument was Musk wants the deal in February, Twitter wants the deal now. Obviously, Musk wants to wait, let it elongate, and then Twitter wants to do it right now to get it over with and kind of like really force the sale. When the trial happens, it's probably going to take months of litigation to be able to ultimately resolve. The lawyers are going to get really rich off of this. It's interesting because her argument is like, look, at the end of the day, you signed the deal, and if you signed the deal, you can't just get out of it. You haven't really necessarily shown that things are materially adverse or that it has been affected, even though Musk's argument is that he didn't know what he was signing up. And it's a question of the judge as well. Like, does the judge feel, boo-hoo, sucks for you, Mr. Billionaire, you should have known? But on the other hand, it's like, what judge is going to force someone to pay $44 billion? You don't do that in America. Like, you don't force someone to pay that much money. So I think it's going to be interesting to see ultimately what happens. Did you see Patrick Boyle's video on the subject? I did not see the Patrick Boyle video on the subject yet. I have a crush on the blonde reporter. Her name is Becky. Low-key Becky. Becky's definitely cute. I like Becky too. All right, Johnson & Johnson reported earnings. Let's go through their analysis. Now, one of the things that I talked about in Sean from InvestLive, we have a podcast called Non-Financial Advice that'll be coming out in a couple of hours. He's looking at earnings in the context of some of the companies that people don't know about to tell him a little bit more about what's going on. So a quick example, Snap-on is a company that makes some of the hardest car manufacturing tools, very, very expensive wrenches and nuts and bolts and stuff like that. He's looking at their earnings over something like Tesla and Netflix. Those companies matter, but their earnings, even though it's a relatively smaller company, Snap-on, lets you know how many used cars are in circulation, how many people are still buying cars, how many mechanics are going back to work. Because if they have higher sales, that means more and more people need these types of really advanced car sort of wrenches, I guess is a best way to describe them, or like these tools, which means that maybe there's less demand for cars because there's a lot of used cars that are being fixed, so people are not buying as much. It's these derivatives of information that you discover from different companies that report earnings that give you a really strong macro understanding of what's going on, right? And that's why it's important to look at earnings from a macro perspective, more than just if the company, right? If Palantir has a horrible earnings, it's like, all right, it's whatever. But if a lot of companies in the data analytics space start to have a horrible earnings, it's like, all right, what's going on? Is there really demand for the service? And how's it playing out? So Johnson & Johnson reported quarterly results on Tuesday that beat analyst estimates on the strength of its pharmaceutical units, even as the company cut its full year adjusted profit forecast due to the stronger dollar. On an adjusted basis, the company earned $2.59 per share, beating estimates of $2.54. So that's good. They beat estimates. They expect a profit of $10 a share compared to $10.10. So you got to ask yourself, like, does that 10 cents really, does that matter too much at the end of the day? Or does it have a major explanation of like demand going down? Total sales rose about 3% to $24 billion, with nearly half of the sales coming from outside the U.S. Analysts expected about $23.7 billion, so they were doing well on that in terms of beating the expectations. Double-digit growth in the sales of cancer drug Darilex and Crohn's disease drug Stella helped J&J beat estimates for a second quarter profit. So these two drugs were in high demand. I mean, already that tells you that this drug is something that people need. That means there is still people that like Crohn's disease, for example. That's something that's important. If I was about to say Palantir, if J&J is selling that many drugs to be able to do that. Medical devices sale fell 1.1% to $6.9 billion, partly due to lockdowns in China. That makes sense. Medical devices are these things that you kind of need inside of a hospital. It's actually, I know a guy who sold a company for $30 million in California and who built like proprietary patents on medical devices. So those sales fell. Sales of the drug Stelara jumped to $2.6 billion. Darilex revenue rose nearly 40%. Wow, to $2 billion. Their COVID-19 vaccine, weak demand and slow uptake makes sense because people have pretty much already got it. Brought in $544 million in sales in the reported quarter. They are up about 1%. Let's go to their stock price right now. J&J does pay a dividend, I believe. I don't think it's an amazing yield, but it is a yield. I think it's like 1%. Less than that. It's at 174 right now, their stock price. Let me share this. Greg's in this chat. He's saying drugs. I heard drugs. Not those drugs. We're talking about life-saving drugs. Even though the drugs you're talking about, Greg, maybe they might be life-saving as well. So that's J&J. Let me look up J&J yield. J&J dividend yield. What is the yield? Is it a better than expected yield? Oh, it's 2.59%. It's not horrible. You get $1.13 every time you buy a share of J&J at this price, 174, that are taxed. You cannot get out of taxes on those. Tesla's down. It was at 740 today. Now it's at 723. So market's pulling back a little bit. Palantir 918 to 912. Market pulling back a bit. S&P staying strong at 385. It rose to about 386. So basically they're down about 21 cents or 23 cents from there. DNA, this stock has been pretty flat. This is the one I did the podcast on yesterday. It's been stuck at that $3.02 price range for a while. So Kathy's just loading up the boat while it is stuck at this price right now. Snapchat earnings are going to be incredibly interesting to me as well. I am very, very curious to see how their advertising model is going. They have 300 million daily active users. At the end of the day, people do use the product, even if you and me don't use the product. But advertisers don't get the most specific advertising. They get more brand recognition, kind of like Twitter versus like call to action or performance-based advertising that still goes to Facebook, YouTube, and Google. So we're going to see how advertisers are thinking about Snapchat at the end of the day. $3 is cash value. Yeah, so DNA is trading at net cash. And what that means is like if you literally took the company and like dissected it into how much cash they had left, it would result in that share price. Which is I just think it's the amount of shares times the share price. So like if the value of a MIT is 100 and I have 10 shares, then it's 100 divided by 10. My share price should be $10. 10 times 10 is 100. So that's what it means by trading at net cash. If you're trading at under net cash, that means you're like either severely undervalued or your company sucks if you can't even trade at book value of the company. Because like Palantir is what, 2.3 billion in cash. Imagine you take all 2 billion outstanding shares of Palantir and you multiply it by like 1. And that gets you to like what they have on cash. That means they would have a share price at $1, $1.30. And that's how they would be trading in net cash, which means it's either really undervalued or people really don't want to buy that company because they don't see any value in the company. So we would see. So DNA is trading at that net cash. Okay, let's go back to CNBC. There was another clip I wanted to talk about that was interesting. Let me pull it up real quick. Yeah, this was okay. So we're gonna talk. So there's two of them. One is the Netflix one. The other one is AMD versus Nvidia. Let's start with the Netflix one. I'll give my thoughts on that, and then we'll get to AMD. So let me share this real quick, and then we'll talk about this. Now, me and Sean, again, we talked extensively today about Netflix and its relationship to YouTube and all this stuff. So I think this will be interesting to take a look at.
Maybe dead money is a victory. It certainly hasn't been dead money. It's been going down. What exactly is Netflix going to have to say today to get people excited about this company again?
Well, Dom, I do not think it will be what they say about the previous quarter. Netflix has already estimated that they would lose 2 million subscribers in the second quarter. And if you think about all of the various macroeconomic headwinds that we have talked about on CNBC for weeks and months now, between rising inflation and a likely recession, or at least a possible recession coming down the pike, it would not surprise me at all if the number was even worse than 2 million. We'll have to see. So in order to get people excited about the stock, I think it's going to have to be something that's said about the next two quarters, the third quarter and the fourth quarter. Netflix will certainly talk about its content. They do have several shows, hit shows coming in the back half of the year, such as The Crown. They have a big movie out now, The Gray Man. But they'll probably talk about their efforts to crack down on password sharing in this new advertising supported tier, which will be less expensive than the subscription tier that people currently around the world pay for Netflix, as ways to reinvigorate growth.
So that growth needs to be reinvigorated in some way, Alex, right? Because Netflix is one of those companies that caught a massive tailwind during the pandemic as everybody kind of got locked down and had to work from home or stay at home. People started to stream a lot more. But it also created a very hyper-competitive environment for Netflix, which is still the top of the heap, but everyone else is trying to kind of get market share from them. How much is that competitive dynamic, as we are showing, by the way, viewers?
Guys, look at that real quick. You've got Netflix at $15.49, HBO. Put in the chat how many of these you have. I have Netflix because my family watches it, and I have Disney Plus for free because I have Verizon. Hulu, my sister has with ads, and I only watch that for keeping up with the Kardashians sometimes, but don't tell anybody. Other than that, I got Apple TV for a 1-week trial, and then I canceled it because I wanted to watch the WeWork thing. Other than that, I got none of these. Let me know which ones you guys have. Let me know which ones.
The price of streaming platforms, and those listening on SiriusXM, I mean, you're talking paying anywhere from $5 to $15, $20 each for these things. How much is that going to weigh on investors as Netflix has to navigate that kind of environment where people are putting out that much more content?
So there's a plus and a minus here. The good news, the good news or the bad news, Dom?
I want the bad news first. I want the bad news first.
The bad news is if you're entering a period of economic downturn when consumers are going to be tightening their discretionary spend. And by the way, there are several studies already out there that this has begun already, where Americans are cutting back on the amount of money that they spend on entertainment. Netflix is the most expensive streaming service out there of the standard streaming services. That's what you just saw on the wall there. More expensive than HBO Max, more expensive than Disney Plus, more expensive than Apple TV Plus, Peacock, Paramount Plus. So for the good news is that's always been a feather in Netflix cap when it comes to its ARPU, average revenue per user. It's always been higher than the competition. And that's what investors like to see. But the bad news is it may be the first service to go if you're looking to save money in a time period where
Okay, how is it now? How is it now? How's it now? Is it bad? Is it good? That came out of nowhere, guys. I'm sorry about that. It's good. It's good. We're back. We're back. We're back. Okay. Yeah, I don't know. That happened out of nowhere. See, this is what happens with Netflix, bro. Netflix, like, they fuck up everything, bro. Amid switch the files. I don't have files in my area. I have this stupid Xfinity nonsense, and their Wi-Fi is not amazing. It's been this whole week, bro. It's been bad. I'm like, I don't know what's happening in my house. The Wi-Fi. We have good Wi-Fi. It's not supposed to be bad Wi-Fi. Okay. Anyway, so that was the main thing to get out of the clip. But this is what Netflix does. They fuck up everything, right? So here's the issue with Netflix. They are not a technology company. They are a media company. And as a result of that, I was talking with Sean yesterday about it. And where are you going to get growth? Like and if they issue a dividend and they're a value stock now and they stabilize around 150 to 200, I'm happy to buy Netflix at that level, right? Because I'm like, all right, at least I'm getting a dividend from a pretty decent media company. But outside of that, it's really difficult to justify it. I know the video is blurry, guys. I'm sorry about that. You guys can hear me well though, so hopefully you can stay. The video will get better in like a couple minutes when the Wi-Fi goes up, but hopefully you guys can hear me well. That's the main issue going on with Netflix, right? So if you see them as a technology company, you think there's a future. The problem is they're a media house, and they used to be a aggregator of content in 2010 to 2016. Every mainstream show, Friends, Office, That 70s Show, etc., they wanted to get Netflix because Netflix had distribution, and then Netflix had the streaming service technology to make sense of that distribution. The problem is now they don't have any streaming service technology because it's been commoditized. So all they have is the content. And as you saw on the screen, HBO, Amazon, Hulu, Paramount, Apple, there's just way too much content. YouTube, that's competing with Netflix. So it's like Netflix is spending $200 million on some new Ryan Gosling film. It's like $200 million, bro, for one piece of content. That it's hard to justify that. And then when people watch it 3 hours later, they're like, all right, what's the next thing? You don't have anything? I don't care. Which is why advertising might just be a better model at the end of the day. And that's kind of the rough stuff around Netflix. So that is my overall thesis on how I think about Netflix. I'm incredibly interested to think about earnings. I'm not going to watch the AMD video because I think the stream is going to crash again. So we'll watch that tomorrow when I get the Wi-Fi better. Yeah, so we'll keep that on the list. But that's the interesting thing about Netflix. I'm curious about what you guys think about Netflix. Really curious. One person says, don't ever think Netflix will issue dividends. They constantly have to burn cash on new content. That's the issue. So please more. And when you said Netflix makes money, they make money, but they burn it almost instantaneously. It's the same thing with Spotify. Spotify does not make a profit. Like Spotify. Why? Because they spent $800 million on podcasting technology and podcasts like media companies. And then they have to pay 80% royalties to the record labels every time they get a stream. So that $10 subscription that they get, it all goes back into content. And it's not that they shouldn't be spending money to fuel the business for the long term. It's a question of, is this just a like cash burner or is this a cash cow? And YouTube is a cash cow because like they don't need to worry about the content because they give discovery to people like me. Whereas Spotify and Netflix have to worry about the content, and it just makes for a horrible business model in my opinion. It's just not a strong business model. Netflix arguably has the worst content right now. I would agree. And again, this is not to be mean towards Netflix. This is just the nature of their business. I really don't like if they had amazing content, I would still kind of have my same bearish thesis on them, which is that at the end of the day, you have to spend a lot of money to get that amazing content. I mean, how much money did they spend for Don't Look Up? That is every film, every celebrity in the universe. And now, I mean, it's not that relevant anymore. It's an old movie. Just like my YouTube videos from November 2021, they might be relevant to some people, but they also might not be relevant. So you've got to make more content. Well, YouTube's not going to pay me to do that. I have to make that. And as a byproduct of making it, YouTube will pay me, but YouTube will not pay me before I make that. It's an easier business model, and it's infinitely scalable at the end of the day. And you need actual technology to curate all that content, which is why YouTube and Google stock to me is just so much more of a better play than Netflix. I blame Amy Schumer for burning Netflix's money. Amy Schumer is not funny. She's just not funny. I'm sorry. She's not funny. Canceled my Netflix a month ago. YouTube has too much good content. Nothing to watch on Netflix. Yeah, that's the other issue. Let's quickly look at the markets before we sign off for today. By the way, guys, we are 8 days away from July 27th. So I hope you guys are excited for 8 days from now. It's going to be fun. Yeah, and YouTube is free. That's the other thing, man. Well, YouTube has a couple of ads. People are willing to sit through some ads. It's hard for people to pay $16 a month for something they may never use. So I might live stream earnings for Netflix. I'm going to be interested to, what is that, 4 o'clock? Yeah, 4 o'clock. Put it. I'll make it a reminder. I'm probably going to live stream that and we're going to talk about Netflix because I am pretty passionate about speaking about this. Netflix at 190, Tesla 725, Twitter 38, Palantir 906. So a little bit of a downturn, like by less than 1% to close out the first 30 minutes of trading. Bitcoin down a little bit, 22. It was at 22.3. But other than that, nothing too crazy going on to close of the market. So yeah, 4 p.m. we will live stream Netflix earnings. I think Tesla's tomorrow. I know every YouTuber in the sun is going to be live streaming that. My live stream obviously would not matter that much for Tesla. Maybe I'll see if Tom's live streaming it. If he is, then we'll just live stream it together if he lets me hop on. But yeah, we'll talk about Tesla earnings soon as well. What if Netflix dropped a similar business model to YouTube and have a section that, well, it's a map. This is so interesting. I'm happy you said this. Me and Sean, the podcast is dropping in a couple hours. We talked about this and I kind of suggested to him, hey, because his argument was like, why doesn't Netflix? It's the most obvious thing, right? Why don't they create like a little program for mini filmmakers or directors where they can upload content and that content's like on, they don't have to pay anything. It's free content. They can run ads against it, make money, all this stuff. So I took it a step further. I was like, hey, why don't they just go against YouTube? Why doesn't Netflix be like, hey, creators, here's another platform to compete with the biggest platform in the world for video, YouTube, we're going at their neck. There's two problems. Number one, you lose all your differentiation of premium content because YouTube, as great as YouTube is, it's not like premium. There's a lot of high quality shit on YouTube, but it's not Squid Game stuff. You're not finding that, right? You need that stuff to be produced. Second is like, well, what are you competing for? Where's the growth? If you're telling me, oh, there's ad dollars, it's like, okay, but like YouTube's getting a lot of those ad dollars. So like if you can't grow subscribers, how are you going to grow ad revenue? Like to the point where it's really growing, right? Like how are you really going after that market, especially if we don't have any of the technology that YouTube has? So it's hard for them to, but I think that's the next obvious step. They have to get user generated content. I'm building a startup right now that is going to come out on July 27th. And the whole premise is, can we create a platform that allows users to get discovered for their type of content? Again, I'll give more thoughts about July 27th on this live stream, by the way. But that's the thesis, is that user-generated content is where the world is going, not this premium stuff. And the platform that builds the infrastructure to support that is the platform that wins. Binary. And we'll see if that ultimately happens. Look at you back here again. Nate, I appreciate you. Thank you so much for being here. All right, so here's what we're going to do today. 4 p.m., we're going to live stream Netflix earnings. Then 11 p.m. at night, late night stock talks. For those who weren't there yesterday, it's a time where I get to just be myself with a bunch of subscribers, and we have discussions, fun, we react to stuff. It's a fun time, and we get to talk about stocks. So I will see you throughout the rest of the day. I'll probably have another video coming out on Palantir and their hiring of this new guy and their relationship with Tesla. I did some analysis on how they could work together. So a little bit more deep digging into what they could do together. It has to deal with edge AI, really interesting stuff. So I'll talk about that then. Thank you so much. 140 people being here in the morning. It means the absolute world to me. I remember when there were 0 people in the world who cared about me, and having 140 who care about me in the morning, it means the absolute world. How long does it take you to make those countdown videos? It takes us about 2 hours, 2 to 3 hours to make those countdown videos. 8 days countdown video will be coming out today as well. So I hope you guys enjoy that. Then thank you guys so much. I will see you later today. Bye-bye.